Hi, everybody. Welcome to the Launching MM Art Indices webinar. We will start in just a few minutes. Before you start, I would like to remind everyone to please change your names to your first and last name and possibly followed by your institution. And we'll start in just a few minutes. Thank you. Hello, everybody. Good afternoon from Beijing. And good morning to our guests in Europe and around the world. Welcome to today's special event, jointly hosted by Cheung Graduate School of Business, CKGSB, and SDA Bocconi School of Management. My name is Ira Zaka. I'm the head of Global Marketing and Communications here at CKGSB in Beijing. And I'm delighted to guide everyone through today's event, an important milestone, which is the launch of the MM Art Indices. They represent a new benchmark for global art investment, which we'll find out more about today. Over the next 90 minutes, you'll hear from the scholars behind the MM Art Indices, which has been built on years of research and auction data, offering new tools for tracking trends across global art markets. Today, we will together explore several key questions. Why have long-term returns on art turned negative for the first time in 70 years? Which regions are seeing a rebound and which regions remain in decline? What role can institutional grade data play in reshaping the way we value and invest in art? Building on the success of CKGSB's Chinese MM Art Indices, which were launched back in 2023, the new MM Art Indices that we're introducing today present the first ever comparative long-term art price benchmark spanning Asia, Africa, Oceania, Europe, and the Americas. They span auction data from 1873 to 2025, and they set the stage for more transparency and rigor in a market that has traditionally lacked standardized benchmarks. We're also extremely excited today to launch the Art Market and Finance Monitor at SDA Bocconi, which will serve as a long-term research hub behind our joint efforts going forward. Before we begin, I'd like to ask everyone to please change your ID here on Zoom to your first and your last name, followed by your institution if you can, as that will help us later for the live Q&A session. Today, we have simultaneous translation between English and Chinese. To select your language of choice, please click on the globe icon at the bottom of your Zoom and choose between either Chinese and English. You can also find simple guidelines in the Zoom chat box. To open today's webinar, we are honored to welcome Andrea Rurale, Director of the Intensive Program in Art Markets and Finance at SDA Bocconi, where he also leads the Master in Arts Management and Administration. Andrea is a tenured lecturer in the Department of Marketing at Bocconi University. He also has conducted research with major players in the art and luxury sectors. Today, Andrea will announce the launch of the Art Market and Finance Monitor at SDA Bocconi, describe its significance and also the collaboration between CKGSB and SDA Bocconi. Please welcome Andrea. Hi, Andrea, you're on mute. If you could unmute yourself, and I will go ahead and mute myself.
Hello. Hi, good morning, everybody. Thank you for this wonderful opportunity for our university, for the community that is around this university, the people that are working, and we met in the Art and Finance network, and to Professor May particularly that started this collaboration together. I will start with this introduction of what's happening on the side of Bocconi, and to understand actually the reason why we decided to jointly together in this great adventure. SDA Bocconi is a business school that is based in Milan. It's a school that is focusing on management, economics, and finance, and is ranked in the many rankings and a list of top business school in the world. Inside the portfolio of the activity that SDA Bocconi implemented since so many years, we worked a lot in the field of the arts management, and recently we, in a way, put together all the resources, the thoughts, the research, and the activity under the umbrella on the arts market and finance in order to try to be relevant, impactful, and contributing as a sort of hub in the research on this field worldwide. I will spend really few minutes before leaving the floor to my colleague, Professor Brunella Bruno, saying that last year, well, actually this year, but it was the last academic year, so in March and June, we launched this intensive program in art market and finance that was a program that was dedicated to looking at the art world with the eyes of operator in the sector of finance and business. So we started gathering together research from Maastricht University, Oxford University, the CKGSB business school with May that represented for us one of the pillars in this kind of research, but also operator UBS, Bank of America, Christie's, and two main art fair like Art Basel and TEFA. Anyway, it was a program like in many schools was organized, and what impressed me a lot was what emerged from the voice of the people that came to talk to us and to talk to the class. The fact that there was an urgent demand for new analytical tools. New analytical tools doesn't mean that the tools that are present are not valid, absolutely not. What impressed me a lot was the fact that there was a research, a sort of call to Bocconi and probably to the academic world to try to combine, put together a multidisciplinary form of research in order to give information, point of reference to collectors, to operators that are actually navigating in the field of art market. In particular, what was presented from different voices, so every kind of people that were involved in this program said it from their own perspective. So the fair had a perspective, the auctions as well, the researcher another, and the bank another. But at the end, there was a request for a higher level of transparency in a market that is considered and has a point of differentiation in this opacity. Then indices were considered to be relevant. They are relevant. The indices developed by Professor May and Professor Moses are considered relevant, but still are considered partial in order to read this entire world. It was also referred to be relevant the necessity for the collectors, the new collector that everybody is now saying that are changing, to find ways to navigate. So maybe not generate and understand the reason of the pricing of the artwork from scratch, but for sure to understand and to know if the price that they paid is worthwhile or not. And this is something that every art fair is dealing with, and so all the courses and the form of accompanying people among the collectors in understanding how the art market is organized is so much present that, in a way, to the academics, it was requested help in define and not substitute indices with some other form of research, but to create a multidisciplinary and overall combination of this form of evaluation. In order for eventually banks and financial operator, insurance, so on, to build a robust risk assessment instrument, okay? On this aspect, so starting from what emerged in this course, we started thinking, me, Professor Bruno, Professor May, and we started thinking that it was a good opportunity, it was a good time to combine schools that have generated and are so oriented into research, but also applied research, so being relevant for the community, to investigate and try to find out a form of high-level dissemination of content, and at the same time keep on a track of research on this field, trying to, in a way, aggregate and include this approach. For this reason, we signed a memorandum of understanding between SDA Bocconi and CKGSB Business School in order to organize this form of platform for research. These indices, together with so many others that are a different form of research that are for sure of a different kind. We are talking about hedonic regression, we are talking about network mapping or sentiment analysis, or in a broad sense, the qualitative research. Bocconi decided to start this art market and finance monitor that actually, in a way, answer this request. So what is actually this monitor that I'm very, very happy and honored to launch together with my colleague? It's something that for us, it needs to be considered inclusive, unbiased, and multidisciplinary platform. So a platform where it's also the day of today, together with presenting the indices and the result, it's also a call for research and, in a way, perspective on reading the market. Together with Professor May, we also launching a special issue on the International Journal of Arts Management entitled Art as Investment, in order to gather even more researcher and perspective on this field. The idea is to combine the academic excellence that is actually the basis of our research and our school with these cross-sector collaborations, also talking with the operator and understanding what do they want in order to understand and exploit this kind of information in order to navigate better in the market. What we will do in this monitor, obviously, that by definition start with this research, so we will also have the special advisory of Jianping May, is the track and analyze the price formation, publish together with CKGSB Business School the index biannually, and develop tools, and eventually generate this kind of bridge between art market and practice with the scientific model. This is actually what I wanted to present you and to, in a way, communicate with a great, in a way, message of consider what we are doing, not substitute of anything at all. We are absolutely inclusive, so we would like to talk and to use, and I really thank all the people that are from the press, to disseminate indices, but also the presence of ours in order to attract many more minds, many more curious and thoughtful form of research, scientific or applied, in order to generate a higher level of consideration and maybe even transparency in this fantastic world. I really thank a lot Ira Zacca for all the activity of communication in the business school, and I would I'm very happy to leave the floor to my colleague, Professor Brunella Bruno.
Thank you so much, Andrea. Really appreciate the background that you set, especially behind the needs in the market that you so accurately reflected, and why today we're introducing jointly this new set of indices. Let me very briefly introduce our next speaker, Brunella Bruno, Assistant Professor in the Finance area at SDA Bocconi, who's also a respected researcher in financial markets, banking supervision, and art as an investment class. Today, Brunella will offer insights into more the novelty behind the indices and what to expect going forward. Please welcome Brunella.
Thank you very much, Ira, for this nice presentation. Okay, so welcome everybody, and good morning and good afternoon, everybody. So the idea today for me is to provide you quickly some more details about the novelties of these indices that were created thanks to the collaboration between the CKG School of Business and SDA Bocconi. So the novelties, also the opportunities that these indices may open up. So as Ira said at the beginning of this event today, so what is new is that is the global scale of these indices, as they are actually aimed to capture the truly global nature of the art market. How this? Because they rely on a huge amount of data, and we're speaking of over 8,000 artists from all over the world, including over 43 pieces of art traded globally at least twice. And I'm outlining these aspects because this reflect the methodology used to implement, to build up these indices, that is this repeated sales approach, which is robust, validated by the academia, and is it enables to take into account the specificities of artworks. So given the larger data set, and what we did, and this is truly new, was to group indices by the artist's nationality, so as to split the macro index into 3 continental indices: the Asia, African, Oceania Index, the European Art Index, and the North and the South America Index. What also it's important to emphasize about the characteristics of this set of indices is that they represent a comprehensive toolkit to assess the performance of the art market. Why comprehensive? Because they capture several dimensions of art performance, not only price, because as we will see later on, thanks to Professor May's intervention, these indices do not only track prices, they also track sentiment and liquidity. So why sentiment, and what does this actually mean? The possibility to, in a sense, capture whether there is an intense bidding over certain segments in the market, basically whether prices are above or below their estimates. And this is important because this may help identify, may help spot bubbles, hype cycles, or market slowdowns. Then these indices also include indicators for liquidity. We all know that one of the main, in a sense, inefficiency of the art market, or characteristic of the art market, is that artworks are not traded often. And we also provide indicators for liquidity, which accounts for how many times a given artist has been traded over a given time horizon, the sale rate of this artist, and a combination of the two, okay, to take into account also this aspect. Also, as for the opportunities, what this set of multidimensional indices, which opportunities they open, which opportunity they offer. So first of all, and this is pretty intuitive, an international comparison, but what I would stress is it is now possible to make these comparisons by using the same approach. So through a standardized metric. And also, having an European art market, it is important because this enables us to restore the relevance of European art. So we all know that European art has historically been a cornerstone of the global art market from a cultural historical viewpoint. But we also know that in recent years, market visibility and momentum have weakened, often in a sense overshadowed by modern or contemporary artists from the US or from Asia, which is of course good. But having now this European art, it's important as this enable us to reestablish the relevance of European artists, which by the way represent a very large component of the artists in the available sample, which may also mean that we can recenter European art within the global discussion and also provide a benchmark that is, say, more close to the actual collection of several collectors, including museums, which collection are made of European artists. So also this multidimensional approach is important because tracking sentiment, so measuring sentiment, measuring liquidity provides a risk-aware approach to, say, measure art performance, which is a better way to take a decision in this segment, and also which enables a more precise, reasoned, and thoughtful comparison with other assets, including financial assets. And as for the future development, rely on the larger data set and the ability to even increase the richness of the data, we aim to develop national art indices, for instance, Italian art or French art indices, which will allow us to provide even more granular market analysis. We also aim to create individual artist indices for the most traded and liquid artists, but even more, based on the richness of the data, what we could do is to explore pricing behavior, not only looking at nationalities, not only looking at collecting categories, but also looking at other factors that, according to, for instance, the public debate, may be relevant in explaining pricing dynamics. For instance, gender of artists, so as to contribute to the debate on relevant issues that may emerge in the art market. So thank you. And yeah.
Thank you very much, Brunella, for a very interesting perspective into what's new about these indices, where opportunities lie, and what's next. What are we to expect? Thank you very much. Now we will dive into today's feature presentation. We're proud to welcome Professor Jianping, who is Professor of Finance at CKGSB and the initiator behind the indices. Professor May is a globally recognized expert in real asset finance and was also a principal developer of the renowned Sotheby's May Moses Fine Art Index. He holds a PhD from Princeton University and has taught at top institutions like NYU, Princeton, and the University of Chicago before joining CKGSB. Today, Professor May will walk us through the newly released findings of the art indices, for which you can find the full report in English and Chinese in the Zoom chat box. He will cover returns by region, volatility, collector sentiment, market liquidity across both mediums, and also looking at geographies. Professor May, please go ahead. Looking forward to your talk.
Ladies and gentlemen, friends and guests from Europe, good morning. My presentation today will be mostly in Chinese, but when I come across technical terms, I may actually use English. Now I'm actually going to present in Chinese.
Today, CKGSB and SDA Bocconi jointly launched MM Art Indices. And these indices include the Continental Art Indices and the Chinese Art Indices. The research is jointly conducted by me, Professor Moses, and Professor Jiang from Shanghai Academy of Social Sciences, and Professor Andrea Rurale, and Professor Bruno from SDA Bocconi. So at this release event, I would like to cover 3 key points. The first point is I would like to take this opportunity to look at the past several years since 2018, the financial crisis, and the global art market has been depressed since then. So today we will have a deep dive into data and take a historic perspective and look at the global art market over the past 10 years, how terrible it has been, and does it provide a historic buying opportunity at the moment? So that is the first question I try to answer. And secondly, this is the debut for the 3 major continental art indices, as mentioned by Professor Bruno. It's based on the birthplace of the artists instead of the European market or American market as we talk about them now. We talk about their nationality, their birthplace, and we will look at the Asia, Africa, Oceania as one continent, and Europe as one continent, and America as one continent. We will look at the artists born in those continents and their artworks performance in the past 25 years. And last but not least, here there is a typo. It shall be the Chinese art spring auction for 2025 instead of 2005. And the global art indices, I would like to make a comparison between the two. Now let's come into the main topic for today. First of all, we would like to mention that the MM Continental Art Indices, I would like to note that the data comes from the world's major 3 auction houses, Sotheby's, Christie's, and Phillips, in Shanghai, Beijing, New York, London, Paris, Hong Kong, Milan, Dubai, Amsterdam, Cologne, Los Angeles, Sydney, Melbourne, Rome, Doha, Zurich, etc. So it covers a global market of the auction records. And the example is taken from the artworks that has been traded more than one time. So it dates all the way back to 1873, the earliest, all the way to the 30th of June, 2025. It covers 7,914 artists, and the total number of artworks hit 43,307 pieces, and the average transaction rate is 82%. And there are 913 artists born in Asia, Africa, and Oceania, and 5,578 artists born in Europe, and 1,423 artists born in Americas. So if you look at this chart, we can see the performance of the 3 indices from the end of 2000 to this year. And the orange line stands for the European index. And from the end of 2000, that was before the global crisis, it grew from 1 to 2, and after the crisis, it experienced a drop, and it had maintained flat. I'm not talking about all the artists. I'm talking about the performance on average. Some of the artists that performed more prominently, but if you treat them as a group, the average performance of this index has been on a downward trend. Is especially affected by COVID. If you look at the years after 2021, the index had gone down over the years, but we saw a rebound in the spring auction this year. And the same for Americas. Before the global crisis, the trend was pretty good. It went from 1 to almost 3. And then we saw major adjustments since then. And then till the end of 2019, we saw a rebound. But you can see that from 2009 to 2021, the trend is a very slow upward trend, and we saw a big drop after the COVID years, but we saw a very strong rebound in the past spring auction this year. And again, let's look at the blue line. It stands for Asia, Africa, and Oceania. And before the global financial crisis, and it grew from the N1 at the end of 2000 to about 5 in 2007, and then it went through the global financial crisis, and we saw a big drop. And then around 2009, it hit the bottom and then started to rebound, and it went all the way up to nearly 9. And around the year 2020, and after the year 2020, we saw major adjustment. It went down all the way from 9 to around 6 at the moment. If you look at the specific numbers, the Asia, Africa, Oceania index grew from 1 in 2000 to 6.21 in 2025, and the annualized compound growth rate is around 7.7%, and the index shows that it continued to decrease in the spring auction 2025, and the magnitude is around 6.4%. And the European index grew from 1 at the end of 2000 to 1.73 in the spring auction of 2025, and the annualized compound growth rate is very slow, only at 2.3%. And the index shows that the growth in the past spring auction is 22.4%, so that is pretty good. And the American index grew from 1 at the end of 2000 to 2.88 in spring 2025, and the annual compound growth rate is around 4.4%. So after a drop during the COVID years, it has enjoyed a 31.7% growth in the past spring auction in 2025, but still there was a 15% drop from a high level in 2021. So there is something interesting. If you look at the 3 major continental art indices, and what are the interesting characteristics of them respectively, and what is their relationship with the development history of a world economy. And if you look at the European market, as we take in the birthplace of the artist into consideration, and the European art market, as you can see from the indices, has not been very active over recent years, but it is more stable. And because this market has started from the era of the Industrial Revolution, that was at the budding phase of the Industrial Revolution 200 years ago, so it has the largest number of artists, but this market is more mature and it lacks growth potential. If you look at the standard variance or the risk of this index, this is the lowest of the three indices. Then let's look at the American market. After the World War II, the center of the world economy shifted from Europe to North America. And against this backdrop, and it led to a large number of contemporary artists, and it demonstrated some growth potential to some extent. But in the past 25 years, due to the global financial crisis, and as well as the pandemic, the COVID-19 pandemic, and also compounded by the interest rate increase over the couple of years. So we saw some volatility with American market. And the one that shows the most activity of the three indices, at the same time the highest volatility, is the Asia, Africa, Oceania index. If you look at the background of its curve, and it's mainly the fast development of the Chinese and Indian economies in the past 20 years, and it has given rise to an active art market, and also we saw the appearance of artists that have attracted global attention. That is why this market has a high growth potential as well as a high volatility. So of the three major indices, the standard variance of annual growth rate, return rate, is 70% for Asia, Africa, Oceania market, and 13.4% for American market, and 9.5% for European market. So we can see that the Asia, Africa, Oceania art market has demonstrated a very close to what is called emerging market in the financial market. It has a high growth rate, at the same time a high risk. So for our friends from the press, as well as collectors and long-term investors who participate in this event today, something intriguing and confusing to you may be a research recently, and this is quite an influential study recently. It looked at the long-term investment return of a stock market, which is represented by the orange line. It looked at the stock market of United States over the past 20 years, and the main target of a study is the Standard Poor index. And if you look at the time period from 1938 to 2024, and we are only half past this year, so the study ended at the end of 2024. So if look at each of those years and calculate the return rate of the past 10 years and roll it forward every year, so that is what the so-called the rolling annualized return rate. And as usual, we use a Standard Poor 500 based in based in the dollars. If you look at the stock market, as you can see, there are two very important historic periods, and where you see the 10-year return rate or long-term investment return rate were very high. And the first one is from 1950 to 1968. That was as long as 19 years. So during that period of time, the 10-year growth rate for 18 years of time stood at a high level, over 10%. And that is to say, if you invest 10 years ago, like the year 1960, or invest in 1950 and you sell in the year 1960, and the annualized return rate is around 10%. So you can see that from 1950 to 1968, this is a golden time for artworks, and collectors may have made a fortune by investing in the art market. And another golden period is the time where the global stock investors have earned a lot from the stock market. That was from 1983 to 2024. And despite of the bursting of the internet bubble in the year 2000 and 2001, and we saw a big slump from a high level in 1998. But if you hold it for 10 years, those stock investors could have made a considerable return from their investment. And you can see that starting from 2018, so that was 18, 19, 20, the return rate on stock investment were pretty good, above 10% or around 10%. So that was about the performance. So just now, I just described a study on the stock investment on Wall Street. So you may be curious if we make a similar study of the art market investment and compare that with the stock market, what would be the correlation of the two? So to answer that question, I think we need to borrow some data, because the MM Art Indices started from the year 2000. So in order to extend the study into a wider historic span, we have borrowed the Sotheby's May Moses Index from 1928 to the year 2000. So altogether, we have historic data for 87 years. So if we put this data together, we start to see something very interesting. The return rate of the art market investment has experienced several ups and downs. And first of all, you can see that starting from 1938, the long-term return rate, and then you go through the World War II, and the return rate started to go higher. And the main reason for that was, in my opinion, was the works sold in 1938 were bought in 1928, where the stock market was at a high point. So compounded with World War II, as you can see in the year 1938, the market was quite depressed. And gradually, with the pass of time, the annualized return rate improved step by step. But after the World War II, after 1945, the return rate on art market declined again, and it went down all the way to a level in 1953 and 1954, and then it started to rebound. And then the art market experienced a roughly starting from 1959 to 1982. As you can see, art market had a very long, as long as 20 years of time, where the annualized gross return rate were above 10% and sometimes even 15%. So that was like a 20-year-long bullish market in history, and then it started to decline starting from 1990, and that was partially because of the Gulf War, and more importantly, I think it was affected by the bubble bursting in the real estate market in Japan, because in the 1980s, Japanese buyers were a very important part of the global art market. With the exit of Japanese buyers, and the long-term return rate on artworks plummeted from a high level in 1990 to nearly zero in the year 2000. And then we saw a pretty strong rebound. And the rebound, as you can see, the market and the long-term return rate went up all the way to the year 2000. And again, and there came the global financial crisis, and then it went all the way down. We saw some recovery halfway, but it went down all the way to the year 2023 and 2024, and not only going down, even turning negative. And what does that mean? It means that in the past 10 years, your collections based in US dollars have not only not earned you any money, but even made you suffer a loss. So that was a terrible performance. As you can see, if you trace all the way back to the year 1953 or 1954, where you saw a market that was comparatively terrible. So the art market performance versus a stock market versus, there is a very strong contrast between the two markets. And this contrast, and if you want to look at a specific data, and the return rate of a stocks is around 10% or even higher than that, and the long-term annualized return rate, that is the rolling 10-year annualized return rate in 2023 and 2024 were negative 0.9 and a negative 1.4 respectively. And this data, if you take a micro perspective of the data, if you look at the influence on the art market in the past 87 years, what were the main factors? So if you look at the years where the art market suffered a loss, there were these years. It's 1938 and 39, 1950 and 1954 and 1999, 2023 and 2024. And it is easier to understand about 1938 and 39. That was mainly because the buyers bought in 1928 and 29, where the U.S. stock market were at a high point. And for 1950, there was a main reason, and there was a reconstruction after the World War II, and that there was a strong demand for capital at that period of time. So from 1950 to 1954, there was a fast global economic development. At the same time, there was a very strong demand for capital, and the stock market performed very well in those years as well. And in 1999, and there was the hype of internet. There was a strong demand for capital in the stock market. And another factor is the stock market and the bond market in the Japanese market went through a major price adjustment. So that was the historic background. And in 2023 and 2024, there was something similar. That is the investment hype driven by artificial intelligence, especially the investment enthusiasm in the stock market and the gold market and the Bitcoin, very good performance. And on the other side, we saw the rate increase by the Federal Reserve because when the short-term interest rate is at 5% and you buy a 10 million artwork, and the opportunity cost every year is about $500,000. So that is a pretty high level of a cost. So that gives the art market a downward pressure. So that was about the years where the long-term return rate were negative. Again, let's look at the high investment return years like 1944, 1959, 1971, 1978, 1980, and 1981. These years, we saw a stable economic growth, even especially in from 1985 to 1992, we saw a corridor of a fast rate cut by Federal Reserve in those years. At the same time, we saw the booming of the property market and the stock market in Japan. So that has brought a high return rate of the art market from 1985 to 1992, and that has given the art market prosperity and higher long-term return rate. So just now we talk about the key events in the world political, economic, and financial history, and we saw a high level of a correlation of between them and the art market. And recently we saw a depressed art market. And while we saw a high prosperity in other asset markets, especially when we come into the era of AI, we are not sure what kind of influence or consequences of AI would have on the world economy in 5 to 10 years. But if we can maintain peace and stability in 5 to 10 years down the road, we think that we can create a unprecedented wealth and prosperity in the human society. I think that is almost certain. So 5 or 10 years down the road, and the number of billionaires globally will be much more than 2,000 as they are now. It could be tens of thousands of billionaires. So tens of thousands of billionaires at that time. And while when it comes to millionaire, I think they need to be counted by 100 million. So at that time, maybe millionaires are just considered the middle class at that point of time. So amid that kind of wealth and the flow of wealth in the future world, so I believe very probably the artworks will be in short supply. So personally, I think for the medium and long-term prospect of the art market, I'm personally very positive. So I think it's quite interesting that we take a historical perspective and compare the art market and the stock market and look at its potential investment opportunities. And now, if you listen carefully just now, you may have found that the European market, the American market have exhibited melting of the ice. We saw the arrival of a spring in those markets, but the spring is still frozen, it's still covered by ice. It's just the beginning. Alright, just now, we just discussed the global art market. We took a historic perspective and compared it with the stock market. In the next part, I think my time is running out, so I need to be faster for the next part. In the next part, I would like to talk about the Chinese art spring auction and the two global art indices, the Impressionism and the contemporary art market. If you look at the orange line, it represents the contemporary art, while blue is Impressionism. And the upper one, the gray one, stands for the Chinese art indices. And if you look at this one, the Chinese art indices, after a drop during the 4 COVID years, and the magnitude of drop is about 48%, and we saw a rebound in the spring auction this year, and the growth is about 9%. So that is a good news. We see some initial signs of a recovery for Chinese art market. And then for Impressionism and contemporary art, Impressionism increased 11% in the spring auction this year, but contemporary art continued to decrease by about 10%. So the Impressionism market has exhibited some positive signals, and you can see that it's fair to say that after the year 2007, it has maintained a flat line. We do not see much activity, and at the spring auction in this year, we saw an 11% growth. So that is one of the two small upswings after COVID-19. But for contemporary, it continued the downward trend after 2021 due to COVID-19 and interest rate hikes globally. So it is continuing to adjust. And next, I would like to announce some sub-indices of Chinese art indices, and that includes modern, contemporary, ink wash, and oil painting. If you look at this chart, the modern, contemporary, and oil painting have exhibited some recovery, but the ink wash market continued to decrease, and the magnitude is about 24%. And regarding the Chinese art market, I think in the future, as we still have a very depressed real estate market, it is still restructuring, and export has suffered some negative influences. So we still see a high level of uncertainty in these two categories, and it still takes some time for the Chinese art market to recover. And then let's look at the sentiment index of the Chinese art market, and in the future we will spread it to the European and the North American market. We will use the same methodology of statistics and measure the sentiment of different markets. And this sentiment index is pretty simple, and that is the hammer price divided by the average estimated price. So that is a so-called premium of the auction, and that is a premium above the estimated price of the auction house, and we take them on an average and compared with a historic level, and then we get the sentiment index. And at the spring auction this year, the sentiment index of Chinese art market is still pretty low, and that is due to the less active auction compared with historic levels. And last but not least, we would like to announce the liquidity index. The liquidity index is calculated mainly with the transaction rate, and that is the percentile of transactions of that year. And this is based on the whole year data of 2024. If we define liquidity as, for example, artist Zhao Wuji, he has participated in auction for the past 25 years, and so the auction number is 25, and the liquidity transaction rate is 0.89, and the liquidity is 0.89, and he is at the top on parallel with Wu Guanzhong. And if you look at the artist with the best liquidity, you can find the top 10 on the PowerPoint. So just now, we talk about the MM Continental Art Indices and the long-term return rate of the art market.
Thank you. Thank you, Professor May, for such a fascinating deep dive both into the continental and Chinese art indices. Next, like Professor May said, we're going to dive into a live Q&A session. So if you have any questions, please raise your hand at the bottom of your Zoom screen, and we'll ask you to unmute yourself. You can then ask your question in either Chinese or English. And just a reminder, before you ask your question, please state your name and the institution you're with. We'll go with the live questions first. If there are no live questions, we have collected many questions from all of you during the registration phase, so we can also pick some questions for there. But let's see if any of the participants have any questions now. Oh, there we are. Ava, Ludovico, I'm going to unmute you one by one. Let's start with Ava.
Hello, can you hear me?
Yes, we can hear you.
Yes.
Hello, Professor May. My name is Jianping Ava. I actually graduated newly from Cambridge. I am now also a practitioner of financial art. My question is the coverage of our index when it comes to the coverage of our index, especially MM Chinese Art Index. So we have covered, for example, the modern art, ink painting, the oil painting. I'm also wondering, are you also very interested in the field of antique? So antique, yeah. Oh, in the future, would you change your even logic of algorithm? So, for example, why you haven't reached to the antique? Yeah. Thank you very much for your question. When you are talking about the ancient artwork, in terms of methodology, we are able to cover. It's more about the data gathering. Is not easy to gather the relevant data. Thanks to the time limit, I would like to say is that you can go to LinkedIn, where you can follow me. You can leave your message. Yeah, we can seek the opportunity of a discussion. It's a quite technical issue, so I'm not gonna seize too much time of all the audience. So this is my brief answer. First of all, from the methodology perspective, we can give it a go, but data gathering, there are some specific challenges.
Thank you, Ava. Ludovico, I'm going to unmute you.
Okay, thank you. And yeah, to be honest, actually, I'm a Bocconi alumnus, so it's very glad to here Bocconi and a partnership with the CKGSB. Also, I want to apply MBA CKGSB. So it's pretty good chance to talk here. And I'm very interested in art and especially in Chinese art. So what my question is about the professor. I mean, have you considered about the crypto? I mean, a stable coin, the 稳定币. How do you think about the future of the art, about the stable coin? And I ask all the professor who want to answer this question. And Piacere, nice to meet you, our alumnus. Yeah.
Well, that is certainly a very interesting question. I think the stable coin, I think the development would actually make this art market. I think the transactions a lot more has the potential to make it a lot more efficient. On the other hand, I think personally, I still believe art. The pricing, especially its valuation, hinges very much on its creative value. So I think stable coin, especially crypto, I think in that class are basically payment mechanisms that would facilitate, probably increase liquidity. In that case, could actually be helpful. But I think in the end, I think the artistic value, I think that's what really matters. So in the long run, that is basically based on my own research observation. So that's my answer. Thank you.
Thank you. Are there any other questions? Let me just turn my camera on. Are there any other questions? I will, meanwhile, professors, read out some of the questions. Oh, we have one question here. Sun Tianjiao. I'm going to unmute you right now.
Dear professors, can you guys hear me? Yes, we can. I'm also from CKGSB. I'm from the Cultural Creative Phase 6. So I'm the painter of oil painting. I graduated from Nankai University, and also I studied at the art school of Tsinghua University. I was born after 1990. I was Generation Z. I'm a female artist, also with Chinese art, especially oil painting. I am very young. What about my career? Do you have any suggestions on my career? I joined some of the auctions in Louvre, in a Peking, also university's exhibition gallery. I also have my personal exhibition. I joined Art 021 as well. I think you have been doing an amazing job already, because the maturity of art, I think it has some commonality as the sophistication of our careers. We are not only in absolute pursuit of speed. You have done a great job, and please adhere and follow up. Let's take a look at how high tech can help you, especially to make your artwork reaching out to more, especially collectors and hobby collectors, art collectors. So more haste, less speed. And again, what's more, I have to say that recently, when it comes to the world history, especially even a longer history per se, when you take a perspective from 1840, which is the start of Opium War, and we have undergone many challenging times, but there are many interesting stories happened. If, let's say, you can connect or navigate through such a time window of close to 200 years, if you tell the stories with novelty, I believe that you will maybe reach a very successful story in the auction market. But as an artist, I think you will be very successful. Thank you, Professor. From the list you have shown, Zhao Wuji ranked tops as Wu Guanzhong. Both artists have overseas experience on art, but I have 2 million fans on TikTok China. So I have millions of fans on different social networking platforms. So do we need to learn from actually Wu and Zhao that I should go abroad to study more, to get more experience from the overseas environment? I think going global or going international is a very, I think, shortcut or a rapid pathway for artists to develop, to grow fast. For example, at the Chinese Academy of Art in Hangzhou, you saw the review exhibition of Zhao Wuqi. You saw that the very important watersheding moments was in 1950s. He went from Paris to the US, and again, and who have generated a lot of new ideas from that period. Some new, maybe they even styles or techniques, etc. I believe if you go travel across the globe, it will really help you on your new creative work. Thank you. Thank you.
Next, I would like to pose a question from one of our registered guests to Professor May and also to Brunella and Andrea. The question comes from, let me just dig it out, from Miss Selena Gung, founder of Medi Advice. She asks, what are the top 3 things to consider when investing in art? And I choose this question because I think a lot of people may relate to this question. And then we'll go back to the people in the room who have raised your hands. I see you. I'll call on you next. So what are the top 3 things to consider when investing in art?
I would have Brunella go first.
Okay, this is a harsh question. It's hard to answer this question. If you look at art as an investment, so this is already, an important, say, assumption that we are speaking of art with all the subjective components that commonly affect art prices as an investment. This is already, important assumption, as I was saying. Anyhow, are we thinking of art as a pure investment? If this is the approach, that is, if this approach completely detached with the aesthetical benefits or the cultural attribution that art, the cultural value that art may have, if we are considering art as a pure investment with no, a consideration of aesthetical benefits, pleasure of owning, cultural value, and so on and so forth, we should stick to risk and return consideration. And in this respect, we should introduce metrics that are commonly used in finance to understand where that either artist or artwork is placed in terms of volatility, in terms of liquidity, in terms of past performance, and and in this respect, the indices that we have been constructed can help to provide to gain a better understanding of the performance along different dimensions, from returns to risk in terms of volatility, sentiment, liquidity, and so on and so forth. But then, if instead we wanted to be to take a more nuanced perspective and still consider that art is not as it's a special asset, at that point we also need to take into account all the aesthetical pleasure, value, social benefits, and so forth. And at that point, we should perhaps mitigate our approach. So if we want to be pure investors, risk-return consideration, but I would say, never let's forget that we are speaking of art, which, by the way, is also a way to minimize. If we also keep in mind that our art is a physical, say, good, which generates aesthetic pleasure. This also reduces our risk, because the downside risk is by definition reduced if we buy something that we do like. So even if the price drops to 0, if we like it, it will always have a value, which minimizes the downside risk of this exposure to art in a sense.
If I can add something, Ira, can I go? Yeah. So thank you for the question. I mean, I will give you probably a wider and less only financial approach. But if I have to think about three things to keep in mind when you're investing in art, is actually the first thing is about the big topics that we didn't cover here, but is still very valid. Is so talking about authenticity and provenance nowadays is so important. Thinking about the fact that the artwork, whatever you buy, needs to be genuine, and it's important to have a track on the history of the ownership and so on. Then Brunella already talked about the fact that, so the second aspect is the valuation and the price. So obviously the art doesn't have a fixed value, but because it's shaped eventually by the market, it's important to make this comparison, use the algorithms that are present, use the software that are present in order to understand if it is worthwhile or not. And obviously, as we're talking about, I mean, the question was, which are the three things that to keep in mind when we think about art as an investment? Understand that art is not a liquid asset. So maybe it takes time to resell, maybe it doesn't definitely obviously give a profit. It's not obvious that it is. So in a way, for sure, it's a medium and long-term investment that you need to have in mind. So these are my 3 points that I always keep in mind whenever I think about art as an investment as a private collector.
Thank you, Andrea. Professor May, is there anything you would like to add to that question?
Yes. I think first of all, I think 3 things I would consider is first is actually how large is the position. So I think you need to consider how much wealth you or your institution has. I think general rule is that actually art is a high return, but also high risk asset. So you want to actually have it in proportion. So the general advice is that actually the allocation should be roughly around 5 or 10%, not too big. But also that also depends on sort of the size of the wealth. So this is the first question is how much to be allocated to art. The second one is liquidity. I think the 2 professors have already mentioned the liquidity. And in this case, the liquidity index we've developed to be very helpful because you want to watch very carefully how often that artist artwork is appearing in auctions. If auction is the main venue for you to actually to realize return. The second thing is sort of how successful the art. Usually when it comes to up to auction, whether it's successfully sold or not. And that basically translates into our liquidity index. You essentially want to focus on, you want to consider sort of liquidity as a very important factor. So if you, for illiquid artists, of course, you want to actually, pay less. And for very liquid artists, so it's very easy to actually realize return. You probably can pay a little bit more. So that's the second factor that actually you should consider very carefully. And the third one, which I think the 2 professors have also mentioned, which is actually this aesthetic value or enjoyment. I always joke to my students that actually, good art actually pay dividends every day rather than stocks, which pay usually quarterly dividends. But a good art actually pays dividends every day. So look at essentially buy art you love. And I think that's very important. So these are the 3 factors that I would consider.
Thank you. Thank you, professors. Next, I'd like to call on the next person who raised their hand, which is an MBA student from CKGSB, Zhu Linlin. Zhu Linlin, I'm trying to unmute you.
Hello, professors, good afternoon. I have a question. which is about the categories of arts. There is, especially for Chinese art, there's oil painting, ink wash, etc. And I like oil painting, and I have some understanding. I want to study more of it. So for those categories, how do you look at their prospect in the coming 10 years? Which one you favor more, or you believe it would go better in the next 10 years? The second question is about the development of oil painting in China. I think it's lagging behind in the Chinese market versus other markets. So I would like to understand the historic themes for oil painting in the Chinese market. What's your view on it? Statistically speaking, if you read the data, the modern arts, basically we look at the birth time of the artist before 1920, it's a modern, and after that it's a contemporary, and that is this categorization is to put us on the same page, or we speak the same language. We can better balance the data based on this categorization. And you read the data, like in the past 25 years, contemporary artists' works have a better growth. And on the other hand, oil painting or the categories outside ink wash. And let's just take oil painting as a general category. And oil painting as a category demonstrated a better market performance. So based on data, in the Chinese market, the collectors favor better liquidities, and also the oil paintings on the modern artists that are more known of by the public, and asking about the prospect of different categories in the medium to long term. I think there are a lot of uncertainties to that. I think as we all work in this area, I believe we have an opportunity to meet, and maybe we can have a face-to-face discussion so that we can talk topic by topic, category by category. There are too many factors, and and I'm not the expert in all of the aspects. So it's better that if we could have opportunity to talk face-to-face.
We have one more question here in the audience, and then I would like to very briefly read two questions collected from the registrants to all three speakers. Merida from Changjiang 商学院，我已经 unmute 你了，您可以讲。
Dear Professor, hello everyone. I am a student from EM 47 CKGSB. Now I'm on a course for New China Chic. I studied fashion design, and I just came back from Europe. I visited many local luxury brands, including their museums. My question is, I find some good brands like Gucci use digital technology to manage their brands. I'm wondering, at present, are there any big or authoritative brands who have online digital platforms that help artists and exhibit their arts? For example, one of the classmates said that she has made a lot of efforts, and now she's still looking for better resources and platforms to exhibit the artworks. For example, they put the artworks online so that they are no more restricted by physical space, and they can put on the platform for collection, exhibition, so that more people can see their works. Even through such platforms, they can get transactions or collaborations. I'm wondering if there's any organizations or companies or platforms like this that you know of.
I think my friends from Bocconi probably would have better answers than I do.
I'm taking this if it's okay. So, in fact, there are technology is an important component of the art market, and innovate. And it's one of the most recent trends in the art market is related to the development of technologies. And so there exists to answer in a short manner, there exist art market platforms that enable to trade art, even by emerging artists, very young artists on the internet. So they do exist, but there also exist forms of the so-called democratization of art. So there is now the possibility to, for instance, invest into a share of a collection or a share of a single painting through the, say, opportunities offered by both financial innovation and also technological innovation. And this is a way to make art a little bit more democratic, that is accessible to people independent on their wealth. But of course, if you do this, you lose an aspect that is peculiar of art. That is the physical nature of art, the possibility of enjoying art because you have art in your house. So if you explore the internet and Art Finance Report, you can have a list of these opportunities stimulated by technology innovation.
Wonderful. Andrea, would you like to add anything to that? No. Next, thank you so much, Marita. Next, I would like to read a question that several registrants of today's event asked, and maybe we'll close with that. So the question basically is in Chinese, so we've translated it into English, but it says that a lot of art indices are based on auction prices, as the professors explained for the MM Art Indices today. However, private transactions have also increased annually. Could this lead to a distortion in the indices? What are your thoughts?
I think the answer is yes. I think depressed art market lately has led to quite a lot of private sales. So we don't have that data. I think we'd love to have that data, but we couldn't. So I think this certainly makes it more difficult to capture the whole art market. So we only capture a part of the market, and that's also a little bit distorted. I think my intuition tells me this probably would actually make the art index even lower had we actually have the data. But on the other hand, it's also possible that actually on the purchase side, this also could be. So I think on balance, it is probably slightly, my intuition tells me it may slightly depress index a bit more, but probably not by much. So in general, I think we would love to have that data, but it's just not available. So the important thing for the index is that actually it's based on transparent, publicly available data, and it can be verified. So as a result, I think auction data right now is probably the most, I think, easily accessible, and also that can be verified data.
If I can add something, I really think that this is the perfect questions to answer and to conclude in a way this panel, because the point is really this. So we have, for sure there is a distortion, for sure we are covering only a part of the total transaction, for sure the other data are difficult to find out, but what is we're seeing every single day is the fact that not only the academics, not only esteemed professor like Professor Mays and everybody else says we would like to have those data. This is also the request by the collector. This is the request of the people that are buying art, because the people are changing. People want to find this kind of point of reference. And this is the reason why, paradoxically, the indexes for sure probably will go to, leverage in the future, but because there are so many private deals on this side, but they are so much important because they represent an element of transparency that everybody is looking at. Our goal, the goal not only of academics, not only responsible of hub like we are in this monitoring Bocconi, is trying to find out and to reach this kind of transparency. The countries of the world are so different, and there are different laws, different form of, in a way, stimulation to transparency that the private deals needs to go through. In some places, we have the phenomenon of the policy for anti-money laundering. In other countries not. So it's for sure difficult and probably impossible at the moment to organize a structured form of uniform collection of data. But the reason why we are here, the reason why CKGSB and SDA Bocconi went together and in a way were inspired by the work of Professor May and Professor Moses is really this. So we need to work and try to collect brains, thoughts, applied research, whatever, in order to make people aware and make people able to navigate in this sea that at the moment is so difficult to see, because actually the data are so we are lacking of so many important data that are represented by the deals and also the galleries. But this is our ambitious, and for sure we work very hard in order to reach it.
Thank you, Andrea. Brunella, is there anything you'd like to add to that final question?
But the thing I would like to add here is that the SDA Bocconi Art Market and Finance Monitor will help, I guess, this is our hope, address some of the issues that have been raised today. And also enabling to, so they call it is collect data, ideas, projects, in order to produce both qualitative and quantitative analysis. So everything, this kind of discussion is relevant for us to understand which issues are relevant for everybody, and also to start thinking about what to do. And getting back, sorry, to the question raised by the students who were asking to Professor about the career pattern. Again, this is, I guess, Andrea, if you're right, if you do agree with me, one of the typical questions that we wanted to address through our monitor. And I mean, we could, for instance, try and understand which are the drivers of career patterns of young artists, how international matter, whether being international matter or not, whether school matters, and so on and so forth. So, that's all.
Thank you. Thank you so much. With that, as Andrea said, the perfect question to end today's event will conclude the discussion. I'm so pleased that today we were able to explore the long-term and regional trends in art investment. We learned that art valuations may be at a historically undervalued point, highlighting the opportunity for collectors and investors to invest today. We're also introduced primarily to a new suite of tools, the MM Art Indices, which, as Andrea and Brunella and Professor May said, offer a transparent, rigorous, and reliable method to gauge art and its valuations. So Very happy we're able to cover such breadth and depth today together. We also witnessed the beginning of an exciting partnership between CKGSB and SDA Bocconi, and the launch of the Art Market and Finance Monitor, which, as Brunella just said, will in the future answer a lot of the questions that we covered today and provide future research in further areas. Thank you so much to our presenters today, Professor May, Andrea, and Brunella, for sharing your expertise. And thank you to all of the guests for joining us today and for the great questions that you sent before and during. Just a reminder, if you haven't downloaded the report of the MM Art Indices, you can do so in the chat box at the bottom of your Zoom screen. They're offered in both English and Chinese. We'll also email them to everybody who registered for today's event after the event. Thank you so much, and we look forward to continuing the discussion going forward, and we'll be releasing additional indices, so please stay tuned. Thank you so much. Thank you.